Good morning, traders. It is Wednesday, June 26th. Today we're going to focus a little more on the SP 500. Taking a look at the SP 500, we've got two charts. The left is our trend analysis 30-minute chart, which focuses only on regular trading hours. On the right-hand side, we've got the full daily chart of the SP 500 futures, showing more or less the overall daily trend from the recent low down over here. Now, if we take a look at the 30-minute chart, you can see we've got a couple different indicators on here. In short, this one here, the red one, shows panic buying in the market. When there's panic buying or greed buying, whatever you want to call it, usually the market tops out and consolidates or pulls back to some extent. And that's kind of where we are. Now we are in an uptrend, so this we're not really looking to short these overbought markets. We're just expecting the market to take a breather, a pause, pull back, while the market just re-energizes itself to go higher. Now the top one here is our panic selling when everyone is flushing out of the market. Now you'll notice I've got blue lines on here. They're at the three tag or 3 number mark. Whenever we get above these levels, that's usually when the market is oversold. This means there's more or less 3 people selling shares on the NYSE to every 1 person buying, and that means the majority are panicking. They're selling out of their positions, and when the masses are selling, we usually are looking to buy, and when everyone is buying, like over here, this is when we are looking to pull profits out of the market. So more or less, yesterday the futures, we've got these oversold hashtags, overbought hashtag marks that when all these things align and you get into these levels, it can give you stronger signals. More or less yesterday, we saw the market continue to go up. We started to see panic selling into the close. On the futures, we didn't get down to the hashtag mark, but on the SPY ETF, based on the analysis that we actually got into an oversold territory. We also have our short-term cycle bottoming out yesterday as well. So there's a few things getting really close and starting to trigger, which I'll touch on a bit more here. But if we move over to the daily chart, you can see we've sidestepped a couple days. We had a crack to the downside, more or less getting oversold. The big question is, are we going to continue to bounce and go higher, or is it going to form a little bit of a bear flag, maybe go a bit higher, and then have a flush down a little bit more back to this 2900, which is a whole number. It's also a significant area here where a lot of volume traded. It'll act as a high volume support zone. We also have the 20-day moving average moving up. We got the 50-day moving average trading here. So we could still see potential, a nice ABC correction, which is very healthy, usually leads to a very strong continuation move. But the markets on a short-term basis are primed and ready for at least a bounce. And we are seeing that this morning. So if we take a look over at let's take a look at a bit bigger picture of our trend analysis. This is the SPY, so the SP 500 index. And more or less, you can see yesterday, right at the close, if we zoom in a little bit more, you can see it right at the close, we got below our hashtag. We had panic in the market, and more or less, we were in an uptrend. And when we get panic selling in the market, we're looking to buy. So we got an entry signal. Today, the markets are going to gap higher. Obviously, this happened on the end of bar, so it happened right as the market closed is when it triggered. So we'll see. We might jump into a long position, see if the markets want to rally up, test these recent highs for the index. But overall, it is oversold as of yesterday at 4 p.m. Now let's move over to the other markets real quick here. Let's take a look over at gold and silver. Yesterday's video, I went into pretty good detail about talking about gold, silver miners, everyone's sentiment of thinking it's going to the moon and back, how I was talking about it being up at these resistance areas and how it's likely going to start to reverse and pull back. Everyone thinks it's going higher, and that's usually the sign that it's not. And yesterday it did reverse back down, closed right below our resistance area that we drew on the chart. Today it's moving lower again. It is still holding up above this 5-day moving average, which is a high momentum move. If this move here in gold and miners have a lot of power behind them, they're going to find support at this 5-day today, tomorrow, and pop and continue to rally. But if they break through here, we're going back down to this 1374, potentially going all the way back down into this range here where all this volume traded down into this 1340, 1360 zone down here. So that's what we're kind of aware of. Pretty big volume going on, some pretty good selling in the metal and for gold. If we take a look over at silver, silver's got a much different looking chart. It's not really moving the same as metals at this point. Had a nice pop. It is actually looking a little more bullish. I like the pattern on silver. It's been consolidating while gold's been rallying. Yesterday it sold off and actually rallied back into the close. I think money's rotating out of gold. It's overbought and starting to rotate into silver. And silver could actually start to outperform gold here for a couple days. Again, this is just daily chart. This is looking forward 3, 4, 5 days going forward. Money seems to be rotating out of the overbought metals and into these undersold, oversold metals, or ones that haven't moved yet, like silver. If we take a look over at miners, miners set to gap down pretty good this morning. They actually are recovering a little bit in pre-market, but yesterday miners gapped higher, they dropped, they sold off really strong during the day, but as the stock market started to sell off and fear creeped into the market, the second half of the day that fear money moved out of stocks and into precious metals and miners and drove the price back up a bit. So we saw them get saved by the fear in the market, but overall, again, we're up to these blue lines, these resistance zones. Things are going to get choppy for the metals sector in general, and we could start to see a pullback going forward. Now, if we take a look over at the dollar, this isn't the greatest chart, but it gives us the visual of what we're looking for. This is the daily chart, and what we're looking at here is simply it's got a nice ABC correction. It's got a nice, perfect Fibonacci measured move. We had the first move down, rebounded back up. There's the A, B, and then the C move down, hitting 100% measured move based on the Fibonacci levels here. And yesterday started to bounce. Today it's starting to bounce. And we could see this continue to move higher and put that downward pressure in precious metals while the dollar has a little relief bounce. The question is it a reaction bounce, meaning it's oversold, it's just having a reaction high, could continue to trend lower afterwards, or is this a significant level where we start to see it actually put a nice impulse move, breaking a previous pivot high, and then starting to work itself higher back up to the 98, 99 area going forward. The area it's in now is a pretty strong support zone. We've had, it's more or less, you look at it as more or less a larger zone. There's a lot of different price through here, but it'll dip down into this whole zone here and find support from all these pivot lows, these pivot highs over here. It's a very significant level. So that's where we stand in terms of metals and the dollar. Looking over at natural gas. Natural gas looks like it had a shakeout low there. It had a nice recovery the last couple days. It is still in a downtrend, but the signs are there that it's trying to put in a significant bottom in a bounce. It had a very strong bounce. It's been consolidating above the 124, 125 area for yesterday, and today it dipped down and got bought right back up. This could be seen as a little bull flag and potentially have the next run up to 240. If it has some power behind it, we could see it eventually consolidate and work its way up to the 255. So there's some pretty good upside potential, and it's holding its ground pretty nice at this point. Looking at crude, 2% up today. It is kind of a little bit of a messy chart. There's a lot going on here. We got a lot of different resistance areas. More or less, the market's doing a running correction, which is really tough to trade, meaning price is chopping around as it's going higher. So it's just ping-ponging around intraday, correcting. Instead of it building a bull flag and consolidating back, forming a nice pennant formation to go higher, it's correcting as it's running higher. It's a running correction, and at any point it can pop really big or it can drop really big, and I find them very difficult to trade. Now we are trading, let me clear the chart so you can see we are into this resistance area. We got the 200-day, the 50-day, prices gapping up. Overall, we are coming right into these previous highs over here. So lots of different resistance areas for the market to try and struggle on. If it can pop and hold above more or less 59.50 or so above this significant high here, if it can stay above that on a daily close, weekly close, then that's a very strong sign, and we could very easily just see it continue to go up. But more or less, it broke out of this bottom, a one-day pop to the first target. Now it's doing a running correction, tough to trade. It's a higher risk play into moving averages, so we're not getting involved in crude at this point. But I do like natural gas for a short-term play, potential pop and continued grind higher after that. Last but not least, let's just take a quick look over at Bitcoin. Bitcoin on fire. up another 10% today. It's going ballistic, going parabolic more or less to the upside, really picking up speed. And it seems like everyone's piling back into it. Again, we had a formation topping here that if it started to break down below its neckline, we were going to get short for a nice drop. Instead, it gapped higher and just did a high momentum run, which is very high risk to just jump into something that has 10, 15% gaps up. Gaps to the upside and just continues to do that. It's what goes straight up typically comes straight back down. If we were to go, I don't think the futures chart goes all the way back there, but more or less the futures chart for Bitcoin over here was pretty much like this. It was pretty much straight up and then it came straight back down. We got to be very aware that this here is a huge pop and it could very easily come straight back down. I'm not looking to get into Bitcoin. It's a huge mover. You can trade it on your own, but it is just way outside the risk level that I want to get into. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.